Hey, welcome back to Score on Business, and we're still here with Destin. So, Destin, before the break, you were talking about FICA, and FICA, that's like the Social Security. So the business the employee has to pay into Social Security, but the business has to pay into it as well. Could you go further into what you were talking about?
Yeah, absolutely. So, you know, when a company offers a 401k match, for example, so say you're going to put in $100 and the company's going to match your $100. That $100 that the company puts in on your behalf is, you don't pay FICA tax, you don't pay Social Security, Medicare on the money that is matched. So you as the employee don't pay it, neither does your employer, but it obviously supplements your retirement account. So that can be, you know, that can be an important benefit for employees that really enhances their retirement savings. And if they think of it like compensation, then it can, you know, if you think about both sides of FICA, that's like a 15%, 16% tax savings
on the amount of money.
On the amount of money that can go into, and it's a, you know, again, it's a great benefit for employees.
Yeah, well, I think the employer would just need to be able to explain it.
That's right. That's right. No, I mean, and education is kind of a key component, and you know, helping employees understand and appreciate that those matching dollars is sometimes a challenge, but I think it can be critical, and it can also help them understand just how much more efficiently those dollars can be spent.
Right. Yeah, and I mean the match, that's, I don't want to say it's free money, but you don't want to miss that.
Absolutely. It's a it kind of is free money.
Okay, so let's see. What else about tax efficiency? What about like business entity choices?
Yeah, absolutely. I think, you know, depending on a business business size and profitability, it could be more advantageous from a tax perspective to be an LLC, or it might be a C Corp, or maybe an S Corp. And so having, and obviously your business changes and grows and evolves, and so what was maybe best for you when you first started your business may not be the best entity type 5 years, 10 years down the road.
Yeah, there's different monies. And then what about 1099?
Well, so we do work with a lot of like independent contractor type folks, as well as, you know, self-employed, and kind of, we, you know, sometimes have the phrase never waste a good 1099 in terms of looking at that to go, hey, you know, what kind of tax savings opportunities could there be for these folks? Beyond business expenses and things like that, when it comes to their retirement plan, oftentimes like a SEP IRA is thought to be the default or the most common retirement vehicle and tax savings vehicle for someone. But actually there's another one called an individual 401k or a solo 401k that most oftentimes has a lot of advantages to the SEP and can be a great way for like a husband and wife business owner to really take advantage of a retirement savings
companies
account.
that have 1099s, and I'll tell you, a lot of folks make people 1099s that are really employees, so I think it's real important to not do that. Right.
No, that's fair. You know, I think it's easy to, maybe sometimes when you're just getting started with an employee and you're not sure if it's going to work out, start them off as a 1099 and maybe they evolve into a W-2 type scenario.
Okay, and what are some new tax laws to be aware of?
Well, you know, with this most recent legislation that was enacted, obviously there were a lot of changes, and there are a lot of ways that it affects businesses, and the qualified business income and the tax treatment of qualified, QBI is what it's often referred to, is at a lower tax rate than it's been in the past. And so, and it affects different organizations. You know, if you're a professional services firm, like a financial planning firm or accounting firm, you don't get to take advantage of the QBI deduction like some of the other some of the other types of businesses. So kind of understanding, hey, you know, what are these new opportunities and who does it apply to and how can I make sure we take advantage of these? And that can, again, go back to entity type. Again, you know, based on these new tax laws, under the old tax laws, it might have been more important to be an LLC, whereas now you go, hey, you know, C Corp looks more attractive to me than it has in the past. Okay.
Okay, so what about business succession planning?
Yeah, well, you know, there's obviously a couple of types of business succession type scenarios. There can be the unexpected business succession situation, which we kind of addressed earlier with buy-sell agreements and stock redemption type plans. But then there's also, hopefully more often, you have a planned exit for a business. And so you know, there's a lot of preparation that would go into a planned exit or selling a business. And you know, a business for a business owner is its baby, and there's a lot of emotional and mental energy that is spent thinking about your business and identity that's wrapped up into that business. And so helping someone, obviously financially is key, but also, you know, supporting them emotionally and mentally to get prepared for what that transition might look like can be critical to them, to getting to the point where you're ready to make a sell.
Okay, good. I'd like to dig into that a little more, but we need to take a break and we'll get to it. We will be right back.